Here's Nithya Easwaran, the MD at Multiples Alternate Asset Management, who believes now is a good time to invest in sectors across India and is positive on themes such as EVs, financial services, pharma, and many more. Aman caught up with her. Here's an excerpt of that chat.
We believe that investing in India is a combination of very strong top-down thesis and then a combination of ground-up analysis of companies that we invest in. So from the themes, all of these four sectors now, we've been in multiples at it for more than 13 years. So there's a very deep mapping of the sectors, coverage of good companies, knowledge of specific sub-themes that we want to pick up in each vintage for each of these. And for us, financial services, pharma, healthcare, consumer, and technology, all of these, as India is heading towards its 5 trillion journey over the next several years, these are sectors that will do well. Now, if you look at these, two of them, financial services and consumer, play to the large Indian market. Where, which is, we all know the story of middle India really, bulging out and the consumption going up. So this is the middle India, which will consume both consumer products as well as financial services. The other two sectors, which is pharma and healthcare and IT services and enterprise tech, is India to the rest of the world. These are strengths of India, both in terms of engineering capabilities, technology skills, or pharma industry skills that we have, and the ability to put up good quality manufacturing facilities and supply to the rest of the world and to India as well. So it's creating a very nice balance, playing to the strengths of India in markets or in capabilities. Now, going forward, what we are also spending a lot of time on is the whole what we call green economy or sustainability-led investments that are happening in India. You would have noted our recent investment in electric vehicles, which we did with the Tube Investments Group. We had made a 1,200 crore investment in their electric vehicle company. So that came out of that initiative of covering this green economy sector. So we are spending a lot of time on mobility, on waste management, the circular economy, and you should see some things happening from the multiples end in these sectors going forward.
As a strategy, Multiples Private Equity looks at, platforms for multi-decadal growth potential as one of the strategies. Can you walk us through all the strategies that you look at before investing?
Yeah. So we, in multiples, we always try to identify category champions in each of these sectors. So that is our underlying theme. So we want to invest in the good to great journey. And we want to be, if you look at our portfolio from the past as well, whether it's Cholamandalam Finance, Delivery, Dream 11, Vastu in our affordable housing finance space. So all of these are category champions in their respective categories. We also like businesses that adopt technology, whether they need not be tech companies, even incumbent companies that adopt a lot of strong technology. Within our investments, we look at when we put out the themes, we look for themes, two types of themes. One is transformational growth, where you have a good company and it is undergoing a transformation in their scale up or adding new products and services and building it out. That is one theme that we catch. The other are, these are upcoming, emerging, large themes where we are quick to identify early winners. That's where our Delivery, Dream 11, Licious, Acco, all of these would fall in that category. And companies like our investment in Ncube, our investment in Zenex, which we did in the animal health business, all of these would fall in the transformative growth category. The third is what we call as platforms. These are build-outs. So our investment in APAC, which is building out a micro SME business, our investment in Vastu, our investment. So all of these would be in the platforms category where we're doing complete build out. So these are the three themes the 4 sectors and the 3 themes that we look for in multiples.
Tech was really the star sector in 2021. We're holding a lot of promise. After that, what has been your observation in terms of which sectors have held out, and what would be some of the other promising or emerging sectors for this year?
So we are going to the multiples philosophy is to stick to the core. We are going after all these 4 sectors and the 5th one, which I spoke about, which is the green economy. And we are seeing opportunities across all of these. So while, in 2021, we had a lot of investments going into technology. If you see, our investments in technology have been since 2014, actually, and we've had a consistent method of identifying investments and being in them and identifying these winners. So I would say all these 4 sectors, the secular story of India continues to be strong. So I don't see any overweighting or underweighting itself. We do know that in the consumer tech, there's a bit of a thanks to the overvaluations that happened. Companies are still growing into their valuations, so we do see lesser of those in our pipeline currently. But consumer is something we are very focused on. So some interesting propositions that we are examining there. Financial services continues to be strong. In tech services, IT services, and SaaS, both we are seeing good investment opportunities. So I can't see anything overweighting itself. All of these will continue to play, and we are very excited by our newer green economy focus as well.
Do you think that exits are becoming a lot more difficult now than they were earlier?
I wouldn't think so. I think things are, so the good news about, capital markets can be pretty volatile. We would have had a discussion a few weeks back. It was looking a little duller, and suddenly you can see the market kind of zooming. But leaving that aside, again, from a overall secular investment outlook, I think things are fair at this time, and we would love to continue to invest. What has happened is a lot more focus on business models, focus on improving margins, focus on improving profitability. So the language at the company's end is also extremely encouraging for investors to come in at this stage. And the growth agenda is back. So a lot of sectors were recovering from COVID, and they had a long recovery as well from COVID, but that is behind us now with this 2023 going in. So things are settling down. We've also seen companies which had a big tailwind due to COVID adjusting back to more a new normal, especially the digital companies. So with all of that falling in place, I do feel that it's a time to make investments across sectors. We also believe that the capital markets in India, a lot of people do expect to see a lot more activity next year in it. So even from an exit perspective, things should look up. But the private markets is still offering exit in this. We are seeing a lot of deals which have a good dose of secondaries as well in them. So I would say that the India story continues to be very good for making investments now.
Well, good to know, but I wanted to also get in your overall view, Nithya, as to what the outlook is at a time when we're looking at a pretty tough environment. There's a funding shortfall. We've seen layoffs across the board. There's inflated valuations. What's your take on the current environment in India?
There was, if you've seen, let's look at a few parameters, right? Inflation was a bit of a worry a few quarters back, and we have seen that kind of settle down in some way. So we are thereby, and that is a big determinant of our consumer sectors, little bit of funding availability to the financial services sectors. We are definitely seeing that coming off. Credit growth has picked up in the banking sector. These are all quite positive signs. FII money is flowing back as far as just from a sentiment perspective. That's a good thing. We are seeing a lot more, people, we're seeing a lot of block trades happening. So liquidity is coming back into the system. So I see these near-term signs as positive. What what has happened is on the overvaluations, which kind of in the exuberant times in 2021, is taking some time to settle down. Specifically, I would put it in the consumer tech, some of the fintech sectors. We've also seen some of the announcements from regulators on fintech, and that has kind of pushed people to reject their business models. So there's a little bit of turmoil in the companies which were a little bit of on the fringes, of the regulations, and is forcing them to come mainstream. But I see all of these as good things, because what has all the the funding winter done in the boardrooms today? There's a lot of focus on preserving capital, lot more respect for capital today. People are talking about, bringing down burns. It's okay if we grow at 25%. It's not necessary to grow at 50%, 60% and keep pushing up the burns. So all of those are good things. Having said that, we do hear, the news on, whatever we hear on Byju's or Farm Easy, and all of that does keep the sentiment in check. But I would say, barring some larger examples and some of the things to settle down where overvaluations are, and some of the companies will take a long time to come back to markets and readjust valuations and raise money. But that is not all India. That's a part of India. I think the India investment opportunity is far larger than that.